I think you're still bearish when it comes to stocks. How much worse could things get? Is there anything this Friday morning to be optimistic about?
Not really, Lizzie. Look, since the war started, I have pivoted, very bearish. And in fact, I've grown more bearish as time has gone on, more kind of feeling that stocks are complacent to what is happening out there. I'm not a geopolitical expert. Unfortunately, everything has to be based on geopolitics right now. But all the bullish arguments I hear are based on just assumptions which just don't seem to make sense of the news flow. Everyone's talking about Trump's off-ramp. Well, what's Iran's off-ramp? Iran is the one who's closed the Strait of Hormuz, which is the one that's disrupting the global economy. I don't see what their incentive is to open it up without being offered something massive in return. I'm not seeing the world in the space that it wants to offer Iran many goodies right now. So I just don't see how this has an imminent outcome. Again, I reiterate, I'm not a geopolitical expert. And stocks definitely are pricing a very imminent outcome. They're pricing that because Trump cares about markets, it'll all be resolved soon. Even though they can't explain how he get there. They're like, Trump will want to off-ramp. Well, he's not the only protagonist in this story. So stocks are completely complacent. And I still see severe downside for stocks. And it's getting a little bit depressing because I'm not seeing where the optimism is. Despite that we went into this situation, with an extremely positive backdrop, I feel like we're ruining everything because I don't see where the end in sight is in terms of the Strait of Hormuz flowing freely. And I think the disruption to markets is still being underestimated.
Stocks facing still a severe sell-off. And interesting that you put the lens on what the off-ramp could be for the Iranian regime rather than for President Trump. We got a great piece on the terminal today about how investors have to rethink and rip up strategies in the playbook, Mark. The 60-40 portfolios is definitely not working, both sinking in tandem. And what is the clearest? Is it all about the dollar still? Is it still about the greenback in terms of how to hedge this risk?
Yeah, it is. Look, I still think that Schuyler Montgomery Koenig wrote the definitive piece on this on March 1st, on the Sunday before markets opened, saying like the dollar is the only haven to this kind of crisis. Obviously, you're going to be getting an energy shock, so you can't buy treasuries. It's inflationary. At some point, treasuries will rally on the demand destruction point as it continues, but it's not the obvious trade because they sell off badly first. You're not going to buy gold because obviously you should see higher dollar, higher yields, and we've had the geopolitical risk premium played out, so you've got to sell gold. So dollar is the only one that works. And, I'm the person who's been a structural dollar bear for the last 15, 16 months. But, since Schuyler's piece on 1st of March, I think the dollar continues to be strong. It has more to rally. I think we're still early innings. Again, that will pivot as soon as the Strait opens. But you've got to believe in the Strait opening very soon, and that requires a very ambitious set of assumptions that I don't think has happened. It's bleak out there, unfortunately.